Hello and welcome to Pip My Day Forex analysis videos. Today we are going to focus on two pairs that have been trending pretty well in the recent past, and yeah, we look for some retracement or some kind of further actions on these pairs. Looking at the strength of the currencies right now, the Canadian dollar has been displaying some good strength in the recent past, and we would, I mean, I see some good possibilities of trading this currency in the near future. So first, looking at the Euro Canadian dollar, we have some interesting moments coming up, especially with the euro sounding so dovish, and we have the ECB interest rate decision coming up tomorrow. And with all the quantitative easing talks going on, and yeah, the ECB is set to further infuse some economic growth into the currency. So that quantitative easing would necessarily mean at least a temporary continuation of the downtrend for the euro, and may not be continuous, but at least in the temporary, at least for the next a week or so, at least you could see the euro still struggling to catch up on the upward momentum. So looking at the euro Canadian dollar pair right now, we see that the euro has been pretty strong, and it's been on a continuous uptrend right from September 2013, and it's been a constant move up, as you can see over here. And then the retracement has begun, and normally for the euro pairs, the minimum retracement or the standard retracement is the 50% Fibonacci retracement, and that is what we've seen over here. And I've tried to capture this moment over here. But what is interesting and what is advantageous for the current trend or the current trading moment that we can generate right now is you can see that the target has been left behind by barely about around 30 pips, 30 to 40 pips. And the normal motion of the market is such that whenever there is a short target which has been left out, the market tries to go back and capture these targets. So with the 50% target in the reach, and from the current trading position, which is around 1.40226, we are talking about around 170 pips, which is tradable from this moment. So let's look at some other possibility of an short entry into this pair that will give us a good advantage of capturing this moment. If you sorry yeah if you look at the 4-hour time frame, we see that there has been a rectangular pattern. This is a classic rectangular pattern that has been formed with the currency pair, and it has tried to break out a few times, but then a couple of times on the upper direction, but then it hasn't really succeeded, and then it has stayed contained within the borders of the rectangle pattern. And if you see the downward action, this is the downward action I've been talking about, which we see on the daily time frame, and it has left behind a few pips for the 50% retracement, as we mentioned on the daily time frame. Now, the common property of the rectangle pattern is that whenever the breakout happens, the target would be equal to the height of the rectangular pattern. Now in this case, this is the height of the rectangle pattern which I have drawn here, and if you clone it and replicate it to the downside, so if the breakout happens over here, this area, then the target is precisely at about 1.3850 area, which is exactly the target for the 50% retracement on the daily time frame that we just saw earlier. So one way to trade this kind of a moment is that since the market has already shown a decent downward action today, it might not be the best position to enter short currently right now. But given that with the US session beginning right now, and there is a possibility for a little bit of a retracement for the euro on the upper direction, upper side, we can expect the pair to at least go up to 1.4060, which is being the kind of support area it has had in the recent past. So it could retest the support, and then with ECB coming in tomorrow, there's a good chance that it could show a swift action down to capture the target which it had missed out in the previous move. So on my in my suggestion, it would be a good idea to enter short on this pair at around 1.4060 with a stop just above this confluence area over here. So we're talking about 1.4060 to say a stop around 1.4160 area. So that would be like 100 pips. But then we're talking about capturing around close to 200 pips on the downward action. So it's a good 1:2 ratio trade to carry, and I think there's a good high probability that this target could be achieved by the weekend at least. So the other pair that I've been looking at is the Canadian dollar yen. Now the Canadian dollar yen has a very swift upward move over here, as drawn over here, from 1.92.93 to about 105.25. So that's a very swift and a very high volume upward move that is normally seen in the market. So if you also look at, there is also a possibility that it has achieved some sort of a target on a Fibonacci extension as well. Let's see if it has achieved some target on the Fibonacci extension. Just a moment. Yeah, if we try to apply the Fibonacci trend-based extension, okay, it has achieved the 1.69. I'm sorry. So you see that the 1.618 extension is somewhere over here at around 1.104.39, and then it has tried to move on a little further up. But on the whole, it has also achieved the Fibonacci extension target for the upward move. And now, if you notice that, if you see that there are so many green candles here, 1, 2, 3, 4, 5, 6, 7. 9, 10, 11, 12, 13, 14, 15, 16. 16 green candles which has taken the currency pair to 1.105.25. Now, Joe DiNapoli's methods of trading suggest that when you see this kind of an upward move without even a minimum of 2-3 retracement along its path, there is a good chance of a pattern called double repo pullback pattern that can be formed at this point. Now, what double repo would mean is that if if we consider this as an target that it has achieved, this particular candle which hit 105.25. Now, if there is a candle which closes above the close of this candle, and then there is a close below this candle. So we are talking about a close below the 1.618 extension target. So let's say somewhere around 104.30. If you see a daily close below, then that is a sign for us to enter short on this for retracement. And the retracement normally is a 50% retracement on the move. Now the 50% retracement for this pair is at 99.11. So let's consider we enter short at around 104.20, and that gives us a good 400 pips, 400 to 450 pips move on this pair on the downside. Now a stop loss for this would be at above this, above the high it has already created. That's at 105.25. So we're talking about a stop loss of about 120 pips, and say you place it around 105.50, and then we're talking about a take profit of somewhere around 450 pips. This is an excellent stop loss to take profit ratio, and it's a worth trade to enter, given these patterns. So we have these two pairs in focus for today, and I would like you to go through this and give me your responses and also comments, and let's see how this turns out. Thank you.